Trading buddies. There we go. Oh, that should work. Hi again. Hello, trading buddies. Nice to have you on board for this, well, technically, I suppose, the first week of April 2022. My goodness, the Easter Bunny. He's not far away. What's that? 10 days? 10 days till Good Friday. For those of you who celebrate Easter, hope you got your Easter eggs ordered or put in the fridge or hidden away from the kids. Don't do Easter anymore, but chocolate, yum. Doesn't mean a lot, does it, at the moment? Let's get into some. Oh, sorry, Marlon, did I jump the gun? My apologies. I'm a bit like that sometimes. So if you missed out on my welcome aboard. It's good to have you trading buddies in the room. Let's see if we can find something to trade, shall we? First up, we will have a look at pound versus the US dollar to see if for a change there is actually something that we can trade. Alas, I still see resistance and support below us. And for those of you who've got no idea what I'm talking about, we are looking, as always, to find a breakout of the previous session, that being the daily session, which in this case was Friday, whose high is there and whose low is there. And if today had gotten outside of that, we would have looked for either the low or the high of today. But we include today's pricing in Friday's range, right? The problem we've got here is the parameters that we set around this are, we're looking to trade the breakout of there and there, right? So we're looking for today 100 pips, not quite. No, not even near it. 66 pips. By the time you put the spreads in, you're looking at probably 70 pips, right? So we're looking at 70 pips. And what I need to see is fresh air or blue sky before I hit those 70 pips. And I've only got half of that before I hit the monthly pivot. You've got to get through those highs as well. So to me, the risk outweighs the reward. And for that reason, I would say no to trading it long. For the exact same reason, there's our entry. Don't forget, we've got I've forgotten it already, 70 odd pip risk. And our reward available is only 1/3 of that, basically, when we hit the support level. So as frustrating as it may be trying to trade this breakout, we've been trying for weeks and weeks and weeks, and there's just nothing there that interests me. There were a couple of potentials, but if you're looking to trade the day before and the day in here, you're looking to trade the breakout long of that and of that 142 pips. So, okay, it's gone. It has broken out, but how's your 142 pips looking? It's not there. You still haven't got a one-to-one take profit area, and you're in here in all this up and down sort of motion. And that's really the only one that's available. So, keep your powder dry, as they say, and do nothing, which is exactly what I intend to do on pound US dollar in terms of the breakout. Now, in terms of, do I want to trade pound US dollars today? Different story entirely. And it does seem to me as though there is a fairly dominant breakout of that trend line or trade line, probably a bit of both really, at a reasonable spot. Yet well, I don't know how this candle formed, to be honest, but it's obviously gone down at some stage, I imagine, because it's open there. Pardon me. It went down before it went up, but I've got no idea of knowing that unless I went down to the smaller time frames. But that is clearly a dominant break of that trend line. Now, I'll add this into the equation. I do not trade the first candle of London session. And the reason I don't trade the first candle of London session is because oftentimes you'll find it goes one way and then comes back the other in the first 30 minutes. So whilst I'm on an hourly chart here, I normally trade the 30-minute chart if I'm trading on smaller time frames. Pardon me. So I will give this a miss for now. But if price were to settle in, say, this area here, not get back below the pivots, then I would be looking to trade that long. I'll see if that sets up. If it doesn't, and price happens to sneak back below the pivots, which are very, very close together, the weekly and the daily, that would look like a false break of that trade line for me. So I've simply got to wait here. I can't do anything right now. I'll just wait until that sets up or otherwise. That's pound US dollar. Do I have a bias on pound US dollar this week? Let me take a look at the bigger picture. Answer is yes, I do. I think this could go long. And if I look at the weekly chart, that is telling me that we've bounced off. This is a monthly trend line coming through here. And we've thus far broken off, bounced off the back side of that trend line. Let me get rid of a few of these horizontal levels here, just to add clarity. I actually love this candle. I think it's a beauty. We've come off the bottom of the range, which of course is a descending channel in this instance. It's also, and I'll show that trend line to you, that monthly trend line, right, where we've broken above it, come back, retested it, but haven't been able to pierce below it again, which to me is fairly bullish. Yet we're underneath this horizontal level. So, you know, the limit of the reward here is probably this area here, 134 in the first instance. That's a fair way away from where we are, of course. So I'm more than willing to take a long here if it does present. The previous week's candle is one that does interest me normally because it has got a red body and it has a low test bar. Well, it's got a big tail on the downside, if you want to put it that way. I'm not sure what it's actually tested down here, to be fair, so let's not call it a low test bar. Let's call it a long-tailed candle with a red body, which is something that I like to see. And the reason I like to see that is because it gives me some run-up opportunity, insurance, if you like, whereby if the sellers are truly in control here, the price should simply fall away. If they are not, however, then if X doesn't happen, I expect Y probably will. And the Y in this case would be momentum to the upside. And here's a beautiful target area sitting up here. The question I have to ask myself is, how does that work in terms of dollar strength, pound weakness, pound strength, pound weak, dollar weakness? Is there a real chance this could rally? Look, that only comes into the equation. It doesn't mean that it's going to change my mind here. I still have a bullish outlook, but it would be tempered somewhat if I could say, okay, the dollar is likely to be so strong this week that I actually don't want to trade against it. Wouldn't change my mind, but it would change my risk. And that's very much a case in point. So I've spent a long time on this, but it's the same for every chart. And that's probably why I'm spending so much time on pound versus the dollar. We do have potential reversals here in most cases that I look at today, certainly. And I'm only talking currencies. I'm not talking the market in general. So we've got a potential reversal here. We've got a higher high, got another higher high, and potentially this is the higher low that pushes price in an upward fashion. Look, price action's a pretty big mess since on the daily chart, I've got to say. Spinning top. And today, thus far, we've gapped down and we've closed that gap and now looking to the upside. That's one thing I hate. I don't mind it when gaps close, but are you able then to go on with the job? Actually, don't see the gap here, which is a bit weird. Oh, yeah, there it is. Okay, got it. What I would say is the resistance trend line is broken. And if I were to get a retest of that, in particular at this area, because you've got weekly pivot, daily pivot, and the trend line to contend with, and we've already had that on the hourly chart. But what a terrible candle. a big-legged spinning top sitting there, telling me absolutely nothing. And for that reason, I'm not willing to, well, that's the first candle one session. I'm not willing to trade it. If it goes long, it goes long. But I'd love to see it pull back again and give me another opportunity. So at the moment, it's a no from me, but wouldn't surprise me to see this just go very, very quickly up into the stratosphere. If it does, we might get a second opportunity. I'm a little bit of a fan of the pound this week because it is at such a strong support level in most cases. Both of the pound Kiwi and the pound Swissy are the ones of most interest to me. And the reason is because of the bigger picture. Bigger picture, we've spoken about pound Kiwi at length, so I won't dive into that too deeply, but it's pretty clear that we've got a strong support level, confluence area. You'd be expecting this to bounce, frankly. Has it done so? Well, it's trying. I've got to say it's trying, but this bullish engulfing bar here may be the signal that we're looking for. I now just need that to be confirmed. So if we do get a significant higher low in here, currently we've got doji shaping up on the daily charts. If we were to get a little bit of a retracement here, on what? Well, on that bar, I suppose. But a higher low in here gets me interested in trading this long, as it does on pound Swissy, which has tried to break out of that range already today, has failed thus far. But if you consider that we've had a breakout of the, let's say, hourly range, can I put it that way? And now we've got a retest of that. That's somewhat interesting. We have had a daily pivot test already. It is early in the day. Don't like early in the day daily pivot tests, but there it is. The problem I've got is we've had that level broken. It now looks like being retested. Does that provide us with a trading opportunity? Maybe it does. Maybe it does on pound Swissy on the hourly chart. I'll keep my eye on that and see how that pans out. But they're the two that I'm really keen on, both pound Kiwi and pound Swissy. There were 4 game changer bars for the week. If you want to have a look at those. Ash, how you doing, bud?
Yeah, not too bad, buddy. Not too bad at all. Just musing over this market at the minute.
Yep. Got anything that we need to crash into, or should I continue?
Well, I mean, the FTSE looks a little bit weak. Let's have a look at it. There's possibly an opportunity here, but I need to be careful because really for me now, I should be aiming for upside because of the hedge situation. But let me just have a look what we've got.
Okay, I'll get to those weekly game changes in a bit, guys. No rush.
I can do that. But there is just a little bit of weakness. Doesn't look like there's a lot of room, I think, is some of the issue. Let me just take that away, do that. And we will do this. And that. So here's the current situation here that you guys can see. Now I'm just going to remove my lines just so it's not so confusing. But all these are shorts effectively. I'm still waiting for the market to kind of come down for me and get me out of that trade all those trades that I've been in for a few weeks. But what it means is that I really need to go for long. Really my trade right now is only really aiming for upside. I've got enough looking for downside. I'm around looks like about 1%. I need a 1% move in the FTSE, but it's got some work to do. You can see that there's a daily pivot here. There's a weekly pivot here. These are likely bounce points to take us to the downside. And I'm not adverse to going long around here, and I'm not adverse to going long here, mainly because I'm not sure whether the market is going to break down today and just get me sort of like nicely cleared up as we go into April. But I do see enough weakness to at least drag us down to these levels here. So if anything, there's a short on, but at least the daily pivot, maybe the weekly pivot, and maybe this trend line down here. But there's some interesting things going on, really. When I look at the
I'm
FTSE,
saying, have we got a clear sentiment to work with?
it's difficult, mate. Not really. I mean, when things stack up, what I find fascinating is that some of the move that we had to the upside, let me make this a little bit bigger. Some of this move that we've had to the upside was really off the back of the peace talks. Now, the peace talks broke down. Effectively, they're broken down. That Russia again being accused of war crimes and genocide. So you would then sort of suspect, well, it should then drag the market down again. But I'm not sure whether it's going to hold on. But there are other issues. China are going into potential lockdowns. It seems like COVID in that particular part of the world where there's zero tolerance. I mean, it's raging everywhere. It's raging in the UK. 1 in 13 people supposedly have got it over here, but with a different policy approach, it doesn't seem to matter quite as much. They're stopping lateral flow tests. You have to pay for lateral flow tests, I think, from the 1st of April. So they're effectively saying, you know what, we're just going to ignore the data from here on in. So COVID will continue to rage through the UK, but it won't be detected.
What's the, and I know you won't have the numbers, but what's the death and ICU rate?
I think they've dropped.
That up or stable?
I think they've dropped in the UK. Okay. You're right, mate. I don't have the exact numbers, but I do think that they've dropped in the UK. So I don't think they're as bad as they were. But
that's kind of okay, isn't it? And I kind of get where they're coming from with letting it roll now. If that's going to be the case, and the health system isn't under super pressure, as long as there's difficult. Not a deadly one coming out.
No, do you know what, mate?
I kind of get it,
Yeah, very difficult to know really what data the government is looking at and what their strategy sort of like is really based on. I've got to be honest, I don't fully understand it, but if that was the case, if what you're saying is true, I mean, I as I say, I don't look at that data, and to be honest, the only reason I don't look at that data is that the policy is much more interesting to me than the data, because they seem to have ignored the data right the way through this.
So they don't give a toss. Yeah,
they're not the same as China. They're not the same as New Zealand and China, where they are, they're coming down hard on COVID. They don't seem to be sort of quite as on top of it. However, what I did read yesterday, which was interesting, is that if 1 in 13 people in the UK have got it, businesses are now starting to suffer a bit because people are going into work having not been detected because of the lateral flow now being not free anymore, going into work and infecting people, and the workforce is taking a lot more sick time. So there are factors here which don't really aid the narrative and the strategy by the government. So I think, because I'm interested more in the strategy, that the numbers, it really does depend. When it comes down to the numbers, it just depends on which numbers you want to focus on. Sickness is probably just as bad, if not worse, for the economy than the death rate. So that's what I mean by it really does depend on the numbers they're focusing on.
See what you're saying.
Yeah.
But you're damned if you do and you're damned if you don't, isn't it?
Exactly. China are seeing lockdowns. China are sort of like reacting to it. So you've got China that is potentially contracting because of further lockdowns. You've got this conflict situation which is not really clearing up. You've got the inverted yield curve, which I'm sure you can't stop hearing about right now. The inverted yield curve was one of the magic kind of bullets that investors and financial institutes used to kind of keep in their locker to predict recessions, and now everybody knows about it. But and it's not really a question of sort of like whether there's going to be a recession now in the US. I think they're just sort of like now sort of saying, well, the recession will be in 2023, or it's going to get pushed back to this point. Well, I would be surprised about that, because if we think about what a recession is, and it's two readings of GDP which are contracting, sort of that sort of determines recession. Well, how can you get a situation where you've got sanctions on a huge oil producer, you've got raging inflation, you've got consumer confidence down, you've got numbers starting to to diminish. How can you not get the next earnings report from the US not being affected by that? And that's the thing that I think that I'm watching out for. Earnings reports are about to start this month. So so I'm watching out to see whether those earnings are actually diminishing. And if they are, then that is going to suggest that we could be sooner to recession than 2023. And I wonder whether, even if we don't get negative earnings, even if there's just, well, let's not say negative, but let's say not as much growth as has been predicted, you'd still sort of suspect there'd be some profit taking. So I'm still looking for a genuine move to the downside. Now, it doesn't have to, when I say genuine, it doesn't have to be a turnaround and all of a sudden a bearish, we see bearish price action. But when you look at the FTSE, which is there's probably a little buying opportunity here with the FTSE as it goes. I might have to take this. Let me just see. Yeah, I should probably take this really.
Do you need time?
No, I should be in, mate. Let me just double check that got triggered. It's not there showing it. Yeah, we're bought up. Yeah, so I've bought the FTSE here because even though these bars do look very negative, we are at sort of support. We got the weekly pivot, we got the daily pivot. We're just underneath. We got this trend line here. So this is a buying opportunity, and actually, for me, it's a hedge, and so it's, in a way, it's risk free. I'm still around about 50 pips away from where I need to be. But in a way, it's risk-free. So I'm just going to sort of trade it up a little bit and see if I can just get a little bit of profit out of this. I think there's enough weakness today to suggest that we do end up a bit lower. So I'm going to take a profit when it's available. Probably I'll have to have a look through this and just see where I'm going to aim for. It might even just be there. There might only be sort of like 4 or 5 pips out of this. But yeah, all good, mate. Anyway. Yeah, so we do need to look through other data. George has just joined us actually, which will probably give me just about enough time for me to manage this. So should we flip to George and then we'll look at some data points for the week after that?
We should flip to George. Hey, George, how you doing, buddy?
I'm well. How you doing?
There's the clock on the wall at the right time. What?
The alarm went on the right time, an hour early.
Oh, that's good.
Happy
mate.
days.
That's good.
Hey, it's still daylight here for me. This is the first time since goodness knows when. So I've gone back 2 hours now. 1 hour last week, another hour this week. So yeah, I'm in bright. Well, it's not bright sunshine, but it's cocktail hour anyway, which is a reasonable hour to be trading.
You should be doing something else than trading,
No, well, maybe after the first hour or so of London session, we can have a cocktail. We'll see. It's Monday. I shouldn't be talking cocktails anyway. What's going on, mate? It's a day that ends in a Y, right?
Beginning of the month, and just having a look at what's happening in the market. I'm on so all my clever lines and stuff are not on the charts because I've just on a new laptop. I still have to put everything in.
Oh, that's laborious, isn't it?
Yeah, it's one of those painful things you have to do.
Mm-hmm.
But I had a quick look at markets that I like to trade when I think of trading the Asian open of the day, Hang Seng 50, and of course the UK 100. I wasn't in the market. Monday morning is not the best for me. I like to sleep in a bit.
Yeah.
But this is what the Hang Seng 50 is looking like. And just quick look at the daily. This daily is looking, I was going to say a little bit neater. I've already put some stuff on. But have a look at this. We are in a tight trading range. And for me, what I'm seeing is this bear trend. Pull back almost to 50% midpoint of that bear trend, trading range forming. We're at the top of a trading range, so I am looking for shorts today. Just put it back on the 5 minute. few interesting things that kind of, in my mind, confirm that view. Just going to put this rectangle here, and I will change the color and explain to you why I'm looking at it. Okay, so earlier on, so depending, if you're in the market, you're always looking for certain patterns on the open, which I really want to talk about sometime. Maybe we do that next week. Hopefully we can pick up a trade that clarifies it. But patterns that happen at the open, whether the open of Hang Seng, which is earlier on, or the open of the UK, where we're looking at open of the US, there's some pretty reliable patterns. 100%.
Yeah, I love that observation. And we don't pay enough attention to that. We do not as traders, because there are definite patterns at certain times of day, whether it's the open or whether it's the close, or whether it's the 1400 hour, whatever it may be. There are a whole lot of times at the day that are genuinely predictable.
Yeah. And I mean, if you really can work hard on looking for those patterns, you'll stand a chance of making a decent living just at that, without adding other things which
I agree, other complex things.
Yeah. So at a very high level, due to time, there's a trading range that formed here. So at that point, that was the opening high of the day, low of the day. Whenever you see a trading range, of course, you've got to just plonk in your measured move. And with your bias that I have that I'm going short, so when I see that measured move just breaking above the high of the previous day, there's a measured move there. Then I wait to see what happens with price. And, we got up to that particular stage. Another little trading range here. We got into that. We could put a leg one, pull back leg two. So pretty strong level of resistance just at the breakout above the previous high. Now, that for me is key. That 2-bar reversal, that hidden level of resistance is key. From there, what I now want to see is just bear strength with a wedge pattern, whatever the case may be. Waiting for a pullback, see if we get into that, test that, either give me a reversal there, the double top, lower low, higher low, then I'm going to be taking that short. So that's Hang Seng 50. The other one that I'm looking at is the UK 100.
Yeah, we're just on this one, George. What's your thoughts on this, generally speaking? The overall kind of direction of this.
So I'm thinking short. I've just plumped up the day here, all because of these levels that we had. So that green line is, of course, high of yesterday, Friday, and low. But if you look tight trading range, we're at the top of a trading range, should be looking to sell back into the trading range. If we get down here, look to buy unless we get a breakout. But then look to the extreme left. That's a key level that and we're just coming off that high. So in my view, this whole area is a sell zone, and I just need to find ways to get into it.
Yeah, do you know what? I find that really interesting, George, because that bar that you just pointed out as the that one there. I mean, that is enough to confuse any beginner trader, isn't it? I mean, the market's kind of doing something. The gaps are difficult, but then you get this gap to the downside, and then this belt hold, which is just, but I really like the way that you've looked at that as a support and resistance level, because that's what it is, isn't it? I mean, it wasn't able to push higher, and not only was it able not to push higher, but there was a gap down from there. I mean, that whole that whole area there is difficult, I think, for people starting out. But I think you have to recognize, if you are starting out, that this is an extreme area. You don't see this kind of chart pattern regularly. But
that's invasion day, right?
Probably, mate. Yeah, I mean, this is one of those things, isn't it? You could probably sort of track history through charts in many respects, and figure out, when things are happening. Quite possibly, but just a crazy bar, really a crazy period, for around about 7 days or whatever, 7 trading days, just a crazy period of price action. Very difficult, I think, for as I say, for new people to look at and say, what's going on with this. And this is what we were trying to say last week. When you see this stuff and you don't understand it, it's not because you don't understand charts. It's just something very unusual's happened. And if you haven't seen unusual before, then you move away from it. Just go and find something else which is a bit more gentle, because they do exist. But as I say, I like the way you're looking at it, because you're saying that this is a resistance level now.
That's all it is. I mean,
yeah.
When you see these crazy things, immediately I say to myself, okay, if the bulls who created this are strong, well, next day I want to see how strong they are. And
yes.
if they fail, I say, okay, we're still in a sell zone. It's dramatic, but it's still sellers in control. So then you just mark it as a key level, and you can see we kind of reacting off that and creating a trading range. If the bulls are strong, we get back to our little toys again. The bulls are strong, they want to break above that tight trading range, and they would want to put a high here, which then creates a new high, doesn't it? And on the other hand, if the bears want to control the market and they break beneath that, all they want to do is get rid of all of this and start to track downwards. So that's key areas. Fantastic if you can see it and start to look for fade in the trading range, failed breakouts and back in. And if we break out above that, well, just wait for the pullback and see how to trade it. So it's just those two things that I'm looking at. I'm still setting up, all my other charts just to see how it goes. So,
do you know, George, I didn't really, I wasn't able to show that well. I was just sort of like trying to manage a trade. But if you go to the 4 hour on the FTSE, this is a level, and it'd be interesting to get your view on this. Could you minimize your screen just a little bit, just down one? Yeah, and draw a trend line from that very, very lowest bar down there on the, is it 7th of March, it looks like.
There?
Yeah, that one.
Okay.
And then go up to the next, there, yeah. So when you sort of like, that's there was a little range there that we've actually kind of broken through now. And I was looking at that and thinking, you know what, it's quite interesting what's happening here. It looks like, when you sort of like look at that as a channel, it looks like we've broken through. If you were to take that trend line right the way to the top of where we, effectively keep going, it looks like we're sort of like we're under that channel line, and it sort of like starts to look like a potential sort of rollover point. But it's a difficult one because it hasn't really tested that channel line, and it may well go higher just to test it from below. But I'm quite interested about the FTSE right now, about how the patterns and the price action really they're in the balance from what I'm seeing.
Yeah, so I mean, I'm glad you raised that up. So if we're looking at another way to look at it, so there's a trend we contained within that. Okay, so whenever we get a break of a trend, I start to think of a pattern we call major trend reversal. That's got key distinct things in it. First, you want to see the trend, which you do. You want to see a break of the trend line, which we have. Then you want to see the market try to resume the trend, which is what it's trying to do here. And on the resumption of the trend, if we are going to get the trend reversal, at some point it's going to fail and go into just a trading range, double tops, lower highs, and then start to trade downwards. So this whole pattern just confirms that it's a major trend reversal. There's a lot of selling going on. The bears want to confirm that, yes, we've broken that trend line and we can reverse this whole thing and sell it.
Yeah, I think so. Head and shoulders there for you, Jeff?
Yeah, I'm struggling with this break of trend, frankly. I can see it in front of my eyes, yet at the break, what's going on there? There's nothing going on.
No,
the break has actually occurred in a range, and that's kind of confusing me. If a trend breaks, you would generally anticipate that there's going to be some selling going on at that point. If you take my if you with my drift, right?
Yes,
I actually don't see that. I actually don't see that.
No. This is why I find the FTSE sort of like one of those, it could literally go either way. and we've got these sort of like this call of potential recession in the US, and you think, okay, well, that will probably bring the S&P and the NASDAQ down, but that money's got to go somewhere. And European stocks, particularly the FTSE, is undervalued if you consider that it hasn't got back to its highs. So, does the money from the US start to come over here? There's a huge possibility that can happen. That the FTSE is actually a decent hedge for the US stocks right now. But yeah, I agree with you. I think this chart is in the balance. I really do.
Here's what I'd rather see, George. If you take your trend line start up to what, the 14th, 15th of March, where there's a train track reversal there, or almost. No, the bottom one, mate. If you bring that up to there, yep. Sorry, no, just bring the existing trend line up to that point. Yeah.
So start it there rather than
start it there, or
from
start
the bottom.
There.
Start it there, and then
Okay.
That's it. Yeah.
And if you go up through the 25th, 26th of March, the bottom, see there's 3 lows in a row there. You go up through the third one. Yeah, go up through there and extrapolate that. To me, that's a break of trend.
Yeah. Another one, isn't it? Yeah. But so, again, untested, and I wonder whether
still
we'll
untested
one more time. Yeah.
So,
but you see my point. There's some selling going on there.
Yeah. So I mean, in terms of trend breaks, there's 2 ways that I look at from price action. You can have, Jeff, what you're talking about, whether it's down here or here, and acceleration down, then some form of pullback. That's a trend break, but also a trend can break in the form of a trading range, a prolonged trading range. So when you start to go sideways like that, we have broken the trend, the bull trend. Now it remains to be seen, are the bulls going to emerge as still strong by breaking out of the trading range and accelerating down, or will the bears then break beneath? The trading range just confuses it because it removes the higher probabilities that the bears have taken over. But it's still a break that's just now 2-sided price action. And you really, instead of trying to, unless if it's a broad trading range, up here, down here, you can trade double bottoms or trade double tops. But if it's tight like this, you just have to wait for a break above it and see if we get a pullback, acceleration, or break beneath it.
I always look for false breaks of resistance at that point. And I don't see that yet.
Yes, yeah. All right, so that's kind of where we're at. I think I'm probably more excited by what could happen on the Hang Seng 50.
That chart, George. That chart looks juicy to me. Yeah.
Well, maybe with those lockdowns in China, that might be a driver as well.
On the fundamentals,
could be.
So that's kind of where I'm at, and hopefully by next week, or not hopefully, by end of day, I'll have set up all my other charts and we can have a lot more discussion next week about the open, trading the open.
Happy days, man. How's you're trading 24 hours a day yet?
24 hours a day, excluding Monday morning and Friday afternoon. By that time, the brain is either sleeping or just shut down.
I can imagine.
So Wednesdays at the market, the one that's open to the public, is next week, the second Wednesday of the month.
Right.
The links are all on the ATW websites and social media. So join me, guys. The open of the Asian session, open of the UK session, open of the US session, and close of the day, close of the US session, 2 hours each. And let's have some fun.
My goodness, then there's stiff whiskey after that.
Wait for the Friday, then you can have double stiff whiskey.
You got me. Look, I want to tune some of those some days, George. So look out for me, maybe there.
Excellent. Now I look forward to you guys, and let's have some fun and see what we can pick out of.
Happy days.
One good Wednesday, so have fun.
Sorry.
I said it's one Wednesday that's open to everyone. So second Wednesday.
Yep. Cool.
All right. much.
Thank you so much for setting the alarm.
Yeah,
All
really
right,
good to see you,
take care.
George.
No problem. We'll see you
Catch you
next
next
week.
week, mate.
Live.
You bet. What time, George?
Bye-bye. It's 9 o'clock my time. That's what I'm worried about. 9 o'clock my time, +2 -2. That's another world.
5
Thank you,
minutes
buddy.
before London Open we start. See you, mate. Have a good week.
All right. Cheers. Take care then.
See you later, George.
How's trade
Yeah,
going, mate?
Fine, mate. Yeah. All good. I've taken profit on it. Actually, I think there might be enough in the way of weakness for this market to come down. So I've taken profit on that, and it's always a decent one when you kind of take profit on the hedge, because obviously you're hedging a few positions, so you got multiple the profit. So it does make things. It does make things a bit easier to make some money when it goes your way. It doesn't always go your way, and then things can get a bit sticky. But
Yes. No, that's true.
yeah, but I just sort of looked at this area here as the potential resistance point, and so I took profit there. And you can see that it might well come to here. There might be I might have missed out on 2 or 3 pips, but I do see enough weakness here to potentially drive this lower. I just want to bring up what Swedes just mentioned. Swedes just said, like, input.
Yeah, she's swearing. She's swearing in the chat box.
Oh, is she swearing? Is she? What's she saying?
Yes. Something about 28 momentum divergence.
Yes. Let's have a look.
Godfathers.
Let's have a look, because I think this is a point worth making. So let's look at this. Let's look at momentum. Now, I don't know what you use, Swede, for momentum, but I always use the RSI. So let's have a look at the RSI. And see what it's saying. Now, can I edit this a little bit? Here we go.
These map of Indias look a little bit frequent here. V-shaped recoveries.
Let's add a 50 in there, and put that there, and that should.
I'll sit back and listen and learn this.
Yeah, this is kind of cool, mate. I mean, this is oh, that hasn't added my 50 at all. Okay, doesn't really matter. Let me just mark it off myself, just so we're not. Oh no, hold on. Oh, get rid of that. Right, let's have a look at this on the daily. What is going on? No, sorry, this is the wrong one. I didn't want this at all. What I want. This is the wrong indicator, that's why. Delete that. What I want is indicators. I want the oscillators, and I want relative strength. And it's got my 50 in there. That's the way it should look. Okay, so this is the relative strength indicator. Now, what Swee's saying is that there is divergence between the indicator and the price action, and effectively what this is about is saying that as the price action moves higher, the indicator moves lower. So the move to the upside is nowhere near as aggressive or positive as it was before. So if we look at this on a 4-hour, this is where we start to get it illustrated at its best. We can see it here. Price action moves high. Now, if you look at this point here, this one's higher and this one's around about equal. Now, if we bring in what that shows us, this is the point here. So there's a little push in the price action there. But look at this. These 2 points are already diverging. In fact, there's divergence right the way from here.
Mm-hmm.
So there's divergence here. There's a higher point, and price makes a high, or initially on the first run, and then when price makes a higher high, the indicator makes a lower high. Then price makes another higher high, and the indicator again makes a lower high here. Now, all this is telling us is that the momentum to the upside isn't quite as positive. Now, we've got this all going on. Look, this continues to move lower. In actual fact, I can do it with this just so you can see. This continues to move down lower. while this initially anyway was starting to move higher, but now it's around about equal. So this is showing us that there is diversion to the upside. Now, this is not necessarily a trigger, but it is definitely an indication that the trend to the upside is running out of power, because this is generated from price. This is all generated from price. So what this is really sort of like saying is that the market, as the market starts to push to the upside, there is less confidence in the move to the upside, and effectively this is really indicating that there's profit taking going on, because that the move to the upside is, it's still going up, but people are starting to take profits on the way. So it's not quite as keen. It's not just out and out buying. And if you think about this in relation to COT data as an example, or reading the tape, this is showing us that even though there is buying, the buying is becoming less and less and less, and it's not saying that there's selling. That's the interesting thing that we need to sort of like make sure that we understand. It's not saying that there is selling. It's saying that there is less buying. Now, if there is less buying, one of two things is going to happen. This is where we sort of like start to get this range. Either another catalyst comes up and more buying is induced again, or at some point the seller, people genuinely start to sell their position, to start to sell the market off, start trying to sell sort of like some of those longer term positions. But it's really sort of like telling us that there's profit taking going on here, which is a flag. That's the first thing that we've got, this flag that this is the momentum to the upside has run out of juice. So we need fresh catalyst. That's really what we're saying here. We need a fresh catalyst to take us higher. If that doesn't come, then the chance that this starts to reverse and possibly even roll over increases. And you could do that with any chart, I've
got to say, price is telling me exactly the same thing.
Exactly. Well, yeah. You can see that the price is exactly, and price will tell you exactly the same thing, because this is generated from price. So that's you don't need these indicators. They just really.
So unless it's telling me when to trade, do I really need to look at that?
No, you don't, mate. Except for there are trading techniques that people will use.
I'm sure there are. Yeah.
To actually give you a trigger. Not just. Yeah. This is telling us this is an indication of this happening. There's also sort of like things that you can use with RSI. Swee's talking about RSI and momentum. So I don't know, Swee. Is there a way that you use RSI and momentum as a trigger? And firstly, if there is, let us know. And if you're willing to share that, even better. But if you're not comfortable with that, that's not a problem. But do you use the RSI and momentum indicators as a trigger? Because I know that they can be used that way. But yeah. So
I guess if you're really not used to charting as well,
yeah,
then that will give you it'll give you a lead in. It will give you a sense of, okay, yes, this is what's happening.
Yeah,
if you're not
absolutely.
really used to reading price. Yeah, I get it.
Absolutely, mate. Okay. Well, this is the thing, when you look at this, so this is on a 4 hour, but this point here is overbought. This is overbought. The top line's overbought, the bottom line's oversold. So it suggests that from these points, the market will come down. This here is oversold. Then it goes down a little bit lower, and this is the danger that people will use it as the silver bullet, but it's not quite. Because you can see that, down here, it was oversold and it went a little bit lower. It wasn't the bounce point. Here, it was a trigger for some downside. Here, more sideways, I suppose, than anything else. Here, again, a trigger for some downside. So when it does touch these lines, it's more of it's a warning. It really is a warning signal. And you could add further indicators to kind of help you get that trigger in the direction that you want to go in. But I mean, personally, I really like RSI. So, when I was learning to trade, it was really RSI moving averages. That was the big thing. Yes, pivots were sort of like mentioned, but to be frank, mate, pivots were much more integral to my trading day when you and I started to trade together. Your understanding of pivots is second to none. I don't know anybody that understands pivots quite the way you do. So it's kind of it's enabled me to sort of add put that into my trading. But when I started, as I say, it was all about RSI and moving averages. So I'd
actually like to learn how they work and compare them, frankly, because I've never used them ever. Never used an indicator other than a pivot, frankly.
Yeah, and I mean, it's an interesting.
I know there's three that are pretty popular: RSI, MACD, and volume. I think
stochastic, and there's Williams percent R is the popular. Yeah,
I mean, true.
To be honest,
I see a lot of really good traders use the three of them.
Yeah,
so there's got to be something there.
Well, Swee's just saying that she doesn't use it to trigger. They just alert her of potential reversal. And I have to say, over the years, I use them less in my trading, sort of for triggers. I will glance at them and sort of like let them tell me something. Let them sort of like give me some information. But it's still really, I mean, I think the two of us are probably becoming a lot more pure about the way we're looking at charts, and it's much more to do with price. Much more to do with what price is telling us, much more to do with drawing lines on the chart. It's much more manual. It's not really sort of like about what's generated from MT4. It's much more interactive and analog in some respects, and I much prefer that. I prefer to sort of, have your price points. Price is king. It always has been, probably always will be. So try and find out where price is going to go to, and
I hope it always is. Otherwise, we're going to have to learn a whole new way to trade.
Yeah, we will. Yeah, but yeah. So yeah. But they certainly are sending up a bit of an alert right now. Anyway, these RSIs, and this is another interesting one. I mean, we're looking at the 4 hour. Look at this on the weekly. Again, very, very similar. The look that we're getting on the weekly is similar to the 4 hour. Divergence starting to come in. A weakness of momentum, and this is potentially even starting to shift. Now, the other thing to be aware of is this 50% line is anything above is bullish, anything below is bearish, and it's also a bounce area. Look how it bounced perfectly on the 50% line. When the 50% line came in, the price bounces away. When it closes there, it's all about the close. Doesn't matter about the wicks. It's generated from close. Bounces away from there. Bounces away from there. Bounces from there. Bounces from there. It's a bit messy there, but there's a little bounce there. Messy here, but another bounce there. So you can see over the course of the last. Now this is a weekly chart, and over the course of the last 2 years, there's been five, six, seven different entry points that have been really reliable as potential indicators that the market was going to go in a certain direction. The reason that the 50% line is so useful is that there's retracement. You've got to from an overbought position, you retrace down to 50%, and then that is a potential buying opportunity.
I'm going to have a look at them. I think we set Alice and I sat down over the weekend and set an exit date for the bamboo.
Right.
I'm now 2 years out from returning to full-time trading, which is when I'll have a look at all those things in depth and see if I can actually add something. But I got a funny feeling I won't. We'll see.
Yeah. Well, I mean, we'll keep discussing it, but thanks, Sweet, for bringing that up, because I think it is something that people can look a little bit more deeply into, and if they want to add an indicator. As I say, I've always found the RSI to be incredibly user friendly. It's very simple. 14-day RSI. It seems to work on all time frames as a bit of a messaging, but with everything, use it with caution.
Cool. Where are we at? Should I look at the game changes yet?
Yeah, let's look at the game chambers. But just before you do that, mate, let me just have a quick run through this, because this is going to be important for our week. So let's just finish my little section here by talking about the data for the week. So Bank of England Governor Bailey speaks. Could be interesting because the UK, and as I say, some of that money from the US might start to come to the UK depending on policy. And I think that the policy of the Bank of England is more dovish than it is from the United States. Cunliffe speaking later on. There was a Fed official on Friday stating that it's probably likely that they will need to raise interest rates by 0.5% rather than a 0.25% from the next time out. So they're looking to get more aggressive, which could actually increase that inverted yield curve scenario. Cash rate from Australia as well this week. ISM. Now, this is where we start to get the numbers. Now, I don't know whether it's going to turn just yet, but ISM services PMI, Brainard speaking as well, he's probably likely to say something similar. Well, if he does say something similar to the 0.5%, then that could put the brakes on the S&P and the NASDAQ. FOMC minutes as well could have a bit of a sway for the week. That's on Wednesday. On Thursday, we have got some unemployment claims. Bullard speaking again. So really, Williams as well is also out on Thursday. We got some monetary policy minutes as well from the ECB, and then nothing really major on Friday. So looking out for those ISMs, looking out for those speeches. Do they continue to kind of follow what was said on Friday and say, actually, 0.5% is probably going to be where we're going to go next? Because if they do, we might start to see some dollar strength, and we might start to see some market weakness off the back of that kind of rhetoric. If they don't, could be a green light for us to be pushing to the upside for a few more sessions. So it doesn't look like much this week, but I suspect it may well have more of an impact than initially it would appear.
Interesting to see what happens with the RBA tomorrow, from my perspective.
Yeah,
because the pressure keeps mounting for interest rate rises, of course, and to keep pace with the rest of the world, you would have to think, apart from whatever the circumstances are in Australia, you would have to think that they would be keeping a very close eye on what everyone else is doing. Of course, everyone else is now raising interest rates. RBA has continually said that no, 24, and all the economists in Australia are saying end of this year.
Yeah.
Certainly there'll be it'd be a massive surprise if they raised interest rates tomorrow.
Yeah.
But what their rhetoric is in the statement will be super interesting to the market if they are willing to concede, if you like, that they're going to have to go early rather than their stated time frame.
I agree.
And if that's the case, the Aussie it gains more strength, in my humble opinion.
Yeah, I agree, mate. And I wonder whether there's one more statement where they don't say anything that's going to rock the boat. And the reason for that is that at least this month we'll see what's going to happen in the United States. We're going to get a little bit more information about whether they're going to be raising it at 0.5, but they're not going to be able to stay where they are if there's an aggressive rate hike cycle. Things are starting to look like they might be changing. And the RBA before, when they thought it was 2.25%, were quite happy to sort of say, yeah, it's going to be 2023, 2024, the end of 2023. But now, if there is a change in the dynamic from the United States, can they stay where they are? I doubt it.
Yeah, they're under pressure. There's no question to do something. So yeah, I'll be watching that one with interest. I do have a position Aussie CAD at the moment long, which is just under interest, doing absolutely nothing. So the market is waiting for that statement. There's no question about that on the Aussie.
Yeah, I think you're right. Well, let's have a look at some game changer bars.
Yeah, let's do that.
I'm running out of
there are only 4 this week, but let's have a quick squiz. First of them was, probably to my mind, the most interesting currency pair on the board at the moment And I don't know why I say that, frankly, but it's because of history that I say that. And it's Euro Swissy. And the reason I say that, and I spoke about this weeks and weeks ago, and yet here we still are. The one thing that really shocked me was last month. I think it was last month. This thing absolutely tanked, just went off the board really, really fast. No doubt the invasion had a lot to do with that. But interestingly, again, you see that pink line or purple line or chartreuse?
Yeah.
No, I don't think so. I'm trying, whatever, one of those things. Whatever that says comes from a very interesting point in history. To my mind anyway, a very interesting point in history. And it is a cloud of a price to some degree. But those of you who were around at the time in 2015, January 2015, I think it was even the 1st of January, I could be wrong, this Swiss National Bank decoupled their currency from the euro. And the market just went absolute apeshit for a very short period of time. That's a monthly candle you're looking at, and I won't go to the hourly, but the hourly is just as dramatic as that. That's 3,500 pips in a month. But the hourly chart went something like 2,000 pips in an hour. Just amazing. And the amount of carnage that caused was also amazing. And the reason I dwell on that is that the market deemed that this was fair value on that day or at the end of that month. And if you go back in time even further than that, I can't, but you can't see anything anywhere near that price. And since then, since that time in point, since that point in time, sorry, the market tried to go back where it was and succeeded. It went back to exactly where it came from, which was astounding. But it took a long period of time. So in this, what was that? I don't remember what the time was.
It's interesting, isn't it? Because that's a similar bar in many respects as George was looking at on the FTSE, where you get this unusual bar, and you're effectively using the range of the bar because it's so unusual as the highest point, and the range the lowest point of that bar is the lowest point. So yeah, definite kind of bounce point for the euro.
Yeah, and if you look at the open and close, the range is still inside that.
Yes, it is. Yeah.
And that to me is why this level is so important. I can't see the market getting through here anytime soon. And like I said, it took, to my mind anyway, it took war or a declaration of war to actually move it below that level. But look what, it just came straight back.
Yeah.
And now it's back above that level and has retested that level. I can't think anything wrong here, Euro Swissy. I just can't. And we got a weekly game changer bar to the downside. And I'm going, oh, come on, turn it up. That's not what I want to see. But that's exactly what's being produced here. So what I make of that is, well, maybe we're looking for a higher low in here somewhere. Thought we had it already, but price has now just gone into range. So it's difficult to say I want to jump in here, despite the fact that we are at the bottom of a range, which is just forming, if you like, because maybe there is a little bit more retracement on that move. Maybe there is. I can't pick it. But the weekly chart's telling me that, the game changer bar is telling me there's going to be downside. I can't jump on board, I'm sorry, because that level to me is so important. I can only see upside, as I said. So I'm out of that one. I won't trade it. But I'll tell you what, if I do see a higher low here, a low test bar, gee, I'll be jumping on that pretty quick, because I think the only way for me is up on Euro Swissy.
Yeah, interesting, mate.
Yeah, it is interesting. That's why I say I think that's the most interesting pair on the board at the moment.
I'll tell you what, if that trend line met that pink line, that would be a fascinating breakout.
Yeah, totally. Well, we're a long way from there, of course, but never say never. You know,
No.
we could be up here and come back to it. We could be down here and come back to it. No
Yeah.
question. But yeah, it's definitely a point in time that you'd be looking at. The pound figures quite extensively in my watch list this week, but the game changer bar on the pound versus the yen is suggesting that we're going to have a pause in this breakout, which has been strong across everything against the yen. Of course, the yen's just it cannot catch a bid. It's just worthless at the moment. How do I reconcile that? Can I trade this short on the back of that incredible momentum against that currency pair? And if you have a look at the bigger picture, which monthly chart time in this instance probably belongs there, but undoubtedly we have broken strongly above that level, and we have a pretty firm base in here as well. You know, we've had bottom after double bottom. We've had a break of this monthly trend line, now a retest of. Well, I think we've had a retest of it, if my memory serves me. Yeah, well, yeah, not on a monthly basis we haven't. So when I look at this chart and I see that massive bar, again, I'm seeing war broken out. We just don't get that type of bar without something fundamentally moving the market, and it has. And it's broken above this long-term range, which goes back 1 year. We've been in a range for 1 year, broken out at the top of it. But only as far as this, I guess, I can only call it the most immediate, which is 5 years old or 6 years old, but there's the level, and it's kind of undeniable as the resistance area, because you've had it before as well. So very strong level that we're at, which is what, 163.5-ish. Have we had a retest of it? Not sure. We have on that one candle, and I suppose on this chart we have as well. I can only think we're not going short anytime soon here. But what I do see is only the potential to come back and test the breakout area. So I think we're probably going into range on this pair, pound versus the yen. Depends entirely on how the market reacts to what has been a cataclysmic, if you like, destruction of the yen's value over all pairs. So how does it recover from there? I don't know.
Well, do you know, mate, there is a point where the yen's lack of value will start affecting the economy, the Japanese economy, and they're aware of that. And you know, they've effectively come out and said, look, we are aware of what's going on, and we might have to take some action. Same with the Swissy. You know, Swissy's their value's too high. And they're effectively saying, look, we're gonna come in and make sure that doesn't get too out of control. I mean, they might get fixed now. If everybody starts raising interest rates, they'll stay where they are and they're okay. But with the yen can't probably support the economy if the price gets too dangerously low. And I think it might well be at that particular point right now. So I think some intervention is likely.
Yeah, look, as we've said before, and you know, I'm a great, I won't say student, but observer, I'll put it that way, of every time that the BOJ does jump in and attempts to manipulate the currency, or for want of a better expression, it works for a day or an hour or 4 hours, and then it doesn't work. So, you know, the market, to my mind, is stronger than the BOJ. And at the end of the day, whilst ever, as you so succinctly put it before, the interest rate in Japan is negative, and in particular, if the Fed go hard and heavy, why would you want to hold yen? Yeah,
exactly.
It just doesn't make sense. So it's very difficult to see it turning around. Although technically, you know, and as a technician as we are. Wow, there's a lot of blue sky in here, I can tell you. There's a whole lot of blue sky.
Pound yen.
If it gets through this level, there's a whole lot of blue sky if it gets through that 160, let's say 164 mark. Wow. Look out.
Yeah.
Anyway, to my mind, it's going to go into range at this point. So I'm really not that keen on trading it. But for the want of the exercise, and if we look back on Thursday and say, well, that bar told us we were going down here and we did, then I would be remiss not pointing it out. It's pretty much that simple. The only other game changer bar really on the weekly chart was Kiwi yen, which is a basic replica of every single currency versus the yen at the moment, which came off their highs last week or towards the end of last week. And now the question remains exactly the same as pound yen. Can this actually reverse? I seriously doubt that it can reverse. But like everything, you know, if you got in down here and you've got a whole shit ton of money in the bank, you probably want to cash that in. So maybe that brings that down a little bit to the breakout area. Maybe, I don't know. But the game changer bar is suggesting exactly that. Not really interested in trading the game changers, as you may have gleaned. But what I am interested in trading is those currency pairs who are at the bottom or top of their range. Dollar CAD is one of those. The issue I have with dollar CAD is indeed the dollar index. The dollar index has produced a classic reversal bar for me here. Beautiful green body, rejection of last week's weekly pivot, retest of the broken, potentially false broken resistance trend line. This is a sell every day of the week for me, until, of course, the high is taken out. But the problem is I've got no reward available. I've got to take on the monthly pivot, which is, of course, new. I'd have to enter here, put my first take profit there, a stop loss there. It just doesn't make sense for me to trade this at this point. But if I do see price hanging around and indeed underneath this high, then I think there's definitely trade on offer for dollar index, which probably the only way I can relate that to the market, unless I want to trade the dollar index, which I tried to do that once and it was kind of weird. I don't know how that worked out. But you go straight back to the euro versus the dollar. So if you have a look at this chart, which says double top, lower high, you'd be expecting exactly reverse on euro dollar, double bottom, higher low, right? Have we got that on the daily chart? Answer, potentially, but the low of that bar has been taken out. Don't really have a double bottom here. And it is a bit ugly. And I've got 1, 2, 3 little Indians breaking out of that range. So it's not really correlating for me that the dollar index, whilst it looks to be in a sell position, that should equate to a buy position for the euro dollar. It doesn't right now. So I'm a little bit confused on that basis. I have to see some more price action before I can actually make a call on that. Perhaps we need to see a false break of support rather before I can actually trade euro dollar long. But the dollar index is definitely giving me a classic bar here that I could trade short if only I had some reward available, which I do not. The two I'm most interested in this week are pound Kiwi and pound Swissy, both of which we've spoken about at length before. We've got a big bullish engulfing bar sitting there on pound versus the Kiwi. What we don't have yet is a classic higher low. What we do have at the moment, however, is a potential retest of that broken trend line. And it's there. I'd like to pick this up. So maybe even on a 4-hour chart, get rid of that because it only belongs on the daily. But if we can find a reason here to go long, I think I'd be very keen. A little bit of a double bottom. That would have been a potential for the higher low. But again, no reward available, trading into the weekly pivot on Friday. But if we can take that low out, come down here, give me another higher low, that bar would be fine. I'd prefer it not to be a spinning top. But if it's got a red body I actually can't see one sitting here, but oh, that'll do. If that one's sitting over here, then I'd be willing to trade this long. So I'm keen to trade pound Kiwi long. Pound Swiss is in pretty much exactly the same boat. We do have a retest of that broken trade line now. Issue, not really. If I'm trading levels, I'm probably happy to get in here, to be fair. There's a clear take profit level at the weekly pivot. I'll have a look at the daily first. Well, I know what the daily tells. I don't really have to look at it. I think on the 4 hour, if this candle was to close as is, I would be looking to trade long above that bar because I've got plenty of reward available to me to get to that weekly pivot in terms of a TP1 at least. Got a clear base, I've got a double bottom, got a potential lower high, and this could be an ABC continuation of that. So I think that's the best one at the moment, pound Swissy long. I'll be watching this 4 hour bar, and if it does close as is, or even a little bit more bearish, I think that would be the way to go. I guess already from a slingshot point of view, you've got to trade because that's a dominant break of a trade line. You could have traded that as is. Maybe that's the way to go. Put your entry above there, put your stop loss below, or maybe even below the daily pivot. I wouldn't be against that. But I think I'll wait till this candle closes. Where the hell are the 4 hour candles at the moment? I'm completely lost. I don't know when they close right now.
Oh, me neither, mate.
Because of the daylight saving shift I've had in the last 2 weeks. Got no bloody idea.
Yeah.
I'll have a look at the hourly charts in a minute and see if that lines up. But I think pound Swissy long, if you can find a way in on your strategy, is probably not a bad idea. Get some money in the bank at the weekly pivot and see if this can reverse. There you go, mate. That's my my look at the week ahead. I think there are a few possibilities. Can the pound strengthen?
It can. The numbers aren't too bad. The Bailey's out today, though. You know, so let's see what he says. Because if he's a bit more hawkish, then I think it will probably strengthen with ease. Because I think there's a bit of an expectation that the Bank of England are probably going to be a little bit more accommodative. So that is going to hinge on that, I would have thought.
How far away is it?
Closes another 50 minutes. So you got about another hour, then it's the close of the 4 hours.
Another hour. And when's he speaking?
No, another hour before the 4 hour bar closes. He's speaking today, and he is speaking today at 10:05. So in about 2 hours time, about an hour's time. Sorry.
So a coincidence.
Yeah.
That's exactly the same time, right? Okay.
Yeah.
Well, he's either going to punch me in the gut, or he's going to give me an opportunity.
I think he might. Well, you know, it depends, doesn't it, mate? Because if the 4 hour bar is nicely down, this one's nicely down. You know, not too high away from entry, then you've probably got a chance to lay it down and let him do his thing, and it probably potentially won't take you in if it's not too hawkish.
That would be my attitude. Yes, I'd love to see it close on the trend line. That would be nice.
Yeah. Fantastic. All right, buddy. Great session.
Well done, eh?
Thank you to everyone. Thanks to Swee for all that participation as well. It's really good to see what you're looking at. I know you're an accomplished trader, so it's well worth us sharing some further ideas on that. Thanks to Marlin for looking after us. Thanks, buddy. I'm sorry I forgot to thank you last week, but it is very much appreciated. And thank you to everyone else that's in the room with us, and we will see you on Thursday. No John, no you actually Thursday.
No,
right?
me. John is back. Yes,
John is back. No Jeff, so it's going to be John and I. So I will see you Thursday. Have a great rest of the week, buddy, and I'll see you
cheers,
next
mate.
Monday.
You too. Thanks everyone for being our trading buddies. See you later. Bye.